Joining us now to discuss is RBC Capital Markets analyst Gerard Cassidy. Gerard, I mean, pretty clean read in terms of what it means on the economy, what the investment banking and trading outlooks look like. What stands out to you about this season so far?
Yeah, Sari, I think you summed it up well. The results were quite good in all of those areas, particularly, as Carl pointed out, the resiliency of the credit quality of the consumer. I think that's really jumps out to people because a number of people were concerned earlier in the year about that resiliency, and it's now showing up. Also, we started to see finally a pickup in M&A activity and ECM activity, as evidenced by the results from Goldman Sachs and Morgan Stanley this morning. It was in the second half of the second quarter. April and May were tougher periods in the quarter, but it really came on at the end of the quarter, and we're seeing pipelines still remain very robust.
So who's the standout for you? I mean, yesterday it was Citi in terms of the price action. Today, Goldman, I guess, wins if you look at some of the equity trading and investment banking advisory fees compared to some of its competitors.
No, you're right. Yesterday, Citi clearly, outperformed the market, or the bank stocks, I should say. They had a lower bar than maybe some of their peers, but they did very well. Today, when you look at the actual numbers, Goldman's numbers are very strong, particularly in the equity trading area, as well as in the M&A activity. Stocks a little weaker today, but again, the stocks have run up going into the quarter, so this is not totally shocking that the stocks are a little softer. Now the question is, can they continue to deliver in the second half of the year to take the stocks even higher?
What is the answer to that question, specifically on loans, Gerard? I noticed B of A up 7 versus a prior up 4. That's a pretty good trajectory.
Paul, you're right. Loan growth is starting to pick up. We're seeing that in the weekly H8 data that comes out on Fridays from the Fed. But we did see that in the second quarter, that year-over-year loan growth has started to pick up for these banks, and that's always a positive. And if we get some more certainty about the tariff policies from this administration in the second half of the year, and there's less uncertainty, that should help loan growth on the commercial side as well as the consumer side.
So as far as the valuations, what do you think is factored in terms of deregulation from here? Because now those regulators are just starting to get in their seats. We see Michelle Bowman as vice chair at the Fed. We have new regulators across the board. When do you think that it materializes and actually makes a difference for bank results?
Sarah, that's one of the big catalysts for the stocks so far from the April lows, is there's clear evidence now that the regulatory approach will be less onerous. We saw that with the notice of proposed rulemaking of changing the supplementary leverage ratio. There is, of course, the stress test results that came out about 2 to 3 weeks ago, which were all very positive. We expect that the Basel III endgame final capital rules, which will probably come out in the fall, will be less onerous than that original proposal. So there is evidence it is moving in that direction, and it's only going to get better in our view, which will be the ability for these banks now to give back more excess capital.
So is it already factored in? Is it discounted in the stock?
No. That's a good question. Certainly some of it is. You have to believe some of that is definitely factored in. Not all of it, because we really don't know what the Basel III endgame will do, but certainly a portion of it is factored in, and that's something investors have to take in consideration when you look at the valuations today.
Finally, Gerard, a number of comments from all of the calls this week about either bolt-on acquisitions or just a broadening of the possibility when it comes to, although they're all very careful to say not an acquisition at any cost. It's got to make strategic and financial sense.
You're right, Carl. I kept on hearing the expression, it's a high bar for an acquisition. And so, but you're right, when your currencies are trading at these high valuations, it gives you the ability to look for inorganic growth. And I think what you're seeing is with the excess capital levels and the high valuations, this could be the ticket for more acquisitions by these large investment banks or the regional banks as well.
Well, Gerard, thank you very much for summing up all the big takeaways from the bank results, what to do with those stocks. Gerard Cassidy, RBC. We continue.